queue, I suppose. Like Jason said, my role is primarily looking at trade flows and our global competitiveness, but I'm part of a team at MLA that also reports the local market in charters towers. So we're part of a very diverse mix of people, and it means we get a full picture of the market as well. We can combine what's happening locally with what's going on around the world. So today I want to provide a bit of an outlook on the red meat and livestock industry for Australia. Given that we're in Townsville today, I'll primarily focus on cattle, but I'll have some comments on the sheep outlook as well. But I don't have any time, sorry, to touch on goats, but can do so later. Firstly, I want to talk about changes in the Australian cattle herd, particularly over the last 6 and 7 years. There's been a huge shift in numbers of available cattle that's going to impact supply at the moment and will do so in coming years. On top of that, I want to talk about growing opportunities, particularly the huge demand growth we're seeing in Asia, and particularly more recently with the likes of African swine fever having a huge impact in the likes of China. And while there is increased opportunity in these Asian markets, there's never been so much competition, particularly out of North and South America, as we're seeing at the moment, which we do need to consider for future planning as well. And I'll also just touch on the sheep side as well, with some short-term and some longer-term sheep export trends. So firstly, kicking off on the supply side, here we've got the Australian cattle herd on the left, and you can see back in 2013 we peaked at about 29 million head, and that was after 2 years of fairly wet seasons, and we had a pretty decent growth. Following that, we hit drought in 14 and 15, and we saw that herd decline significantly. More recently, there's been a bit of an uptick, but again, as you're all aware, most of Australia has now returned to severe drought. So we're estimating the 2019 herd to be back around that 26 million head mark, which is very far below where we were just a few years ago. And even going forward, that herd liquidation is still going on, so we're expecting further declines for 2020 as well. On the right-hand side, we can see a key driver of that herd decline. This is the female portion of the national kill. Anytime it really goes above 47%, we're in herd liquidation. And you can see over the last probably 12 months or so, that female kill has skyrocketed. It's even exceeded the previous drought in 14 and 15 in terms of its magnitude. It's yet to last as long as the previous drought, but it's definitely up at that extreme end. So we've liquidated a lot of our breeding numbers, which is going to have implications over the next few years in terms of ongoing supply and how we rebuild our herd. Just looking back a little bit more historically, this is changes into the national herd on an annual basis going back into the 70s, and I've flagged where 2019 is there. It's declined about 7% year on year, which is more than the previous drought and is comparable to the magnitude of what we saw back in the beef crash years of the late 70s and early 80s. It's yet to last anywhere near as long as that, but we are very much at the extreme end in terms of the extent of liquidation that we've seen even just over the last 12 months. So this is going to remain an ongoing challenge for us going forward in terms of how we recover and how we continue to bring supply coming through. So translating those herd numbers into the numbers of cattle coming through the supply chain, and this is probably a better reflection of supply on the market and its impact on price. We can see that over the last 12 months we've seen an uptick in slaughter and live export. So here we've got adult slaughter in blue and live export in orange. And overall, we've exceeded that 9 million head mark, or we are expected to this year. We're yet to hit the same levels that we saw in 14 and 15. That was unprecedented years for Australian cattle turnoff, and that's because we're starting from a much lower herd base this time of liquidation. Looking forward, we can't sustain the same turn-off rates that we have in the last 12 months, so we are expecting overall supplies to contract somewhat. If we then hone in purely on the live export side, in orange, this is the same data but just ignoring the slaughter component. We can see more clearly trends going on for exports as well. And over this year we've seen an uptick in export numbers, and we're expecting live export shipments to finish the year at a bit over 1.1 million head, which is nowhere near what we saw in 14 and 15, but is still probably going to be the third highest export year on record. Looking ahead though, we can't sustain those numbers given this where the herd's at and the general shortage of cattle that's going to be on the market in the next few years. So we are expecting those export numbers to come back. However, if we look beyond the previous drought, this is more a return to what was actually probably more normal years at about that 800 to 900,000 head mark per annum, as opposed to those unprecedented years that we saw in 14, 15 and as we're at the moment. So we're still going to have cattle to send to our export markets. That shouldn't be an issue. Just looking at the last few years, this is just our key export markets. This is the last 3 financial years. On the left we've got Indonesia, or feeders to Indo, also slaughter cattle to Vietnam and breeders to China. And across the board, last financial year we did see a bit of an uptick, which is also reflecting supply, but also those fundamental demand factors, which I want to touch on a bit in a moment, that across the Asia region there is strong demand for protein and our product. So moving on to that demand story, Jason had a really good map of the world of where the populations are, but he also referred to where our consumers are, and particularly noted those wealthy consumers. And yes, Asia is massive, but the number of wealthy consumers is still probably less than the likes of Europe and the US. However, what is interesting though is that Asia is really the home now of where those wealthy consumers are emerging. The likes of China and Southeast Asia are contributing the most number of middle to upper kind of consumers in these markets. So this chart here just looks at different regions around the world and looks at total tonnage of beef being consumed in these regions. And I've just highlighted the growth we've seen in Asia over the past 10 years and forecast over the next 10. The majority of beef consumption is coming out of Asia. Asia's been the powerhouse over the last 10, it's going to remain so as well. And about half of that Asian growth is coming out of the likes of China. So it's a huge market for us, and we're seeing that in our exports as well. So there's huge opportunity for our product in these markets. This is just a bit of a summary of some of our consumer research that we do. So MLA does pretty extensive market research around the world to understand what are the key drivers of our consumers. So here we've got some key Asian markets for Australia. And the purchasing behaviour of a consumer is extremely complex, but we can condense that information down into some 3 key drivers of what pushes a consumer to make purchases. So condensing that into a few top 3 drivers, it's no surprise that in our Islamic markets, halal is key, but across the board, safety and fresh are also primary motivators when purchasing beef. And this is also ignoring things like price and the income of the consumer and looking at these other factors. But I think fortunately for the likes of the live export industry and also the boxed beef industry as well, these are very much attributes that the industry can own. Very few competitors can truly promote themselves as being all 3 as a halal, fresh and safe as well. So I think we've got a competitive advantage in supplying these markets with a product that's certainly wanted. So that's some of the broader trends we're seeing, particularly in Asia. This has been happening for the last 10 years and will continue to be so going forward as well. But adding further fuel to that shift in demand has been African swine fever. And this has taken up a lot of headlines over the last year, and it's going to have a huge impact on global meat markets going forward. So it hit China about mid last year. It's now spread to every province in the country. It's in North and South Korea, it's in the Philippines, it's in Vietnam, Laos, Cambodia, more recently Timor-Leste. So it's pretty much right across Asia. But when we're looking at the impact of ASF on trade and meat markets, China is the key one to look for. It accounts for about half the global pork industry. It's the world's largest producer and consumer of the stuff. So its impact in China is going to be the main driver. That said, it's still a really critical issue for these other countries that have captured the disease. So estimates range from anywhere between 20 to 40% of China's pork production is going to go missing due to the disease, which is about 10 to 20 million tonnes of product, which is more than the amount of global beef traded or pork traded on the global market. It's basically beyond the means of any single country to fill that gap. So we are also now beginning to see it actually impact trade flows as well, particularly in recent months. We've seen a surge in meat going into China. It's now the #1 meat export market in the world. And on the right-hand side, we've got year to August meat imports in China. So whether it's pork, poultry, beef or sheep meat, all these proteins have recorded double-digit growth and are basically at record levels. We estimate about 1/4 of the global meat trade is now being eaten up by China, which has never really been the case before. Never has the global market been so concentrated on one single country. So it's having a huge impact. And it will also support across the region meat demand or imported meat demand from places like Australia. Just finishing on the demand outlook, and Jason had some similar slides before as well, but this is just a ranking of our most valued beef and cattle export markets. And you can see that Japan, China, the US and Korea are big beef export markets, and Indonesia is by and far our largest live export market. However, the main thing I want to point out here is the change that's happened over the last financial year. So this chart on the right is the same data, but it's looking at the growth over the financial year compared to the previous. And the good news is basically all our markets have grown in value over that period, but China has grown by almost $1 billion. It's just shy of 900 million, which is a massive injection of money into the Australian beef and cattle industry that we've seen in just a 12-month period. A lot of that is that long-term demand from a wealthy consumer class in China, but also it's the materialisation of what's happening with ASF in that country. So it's been huge sweeping changes taking place in China and the trade we're doing with that country. So I think there's generally a pretty optimistic outlook for demand and demand for Australian cattle and beef. But the other side of the equation is we've probably never seen so much competition on the global market, particularly out of North and South America, which at the moment has been okay because there's been a growing pie, but if that pie was to stop growing or contract, the competition could become particularly acute. So here we have a chart of the top 10 global beef exporters. So it's mainly Australia, which is at the bottom there in yellow, and then you've got the North and South Americans and India in there too. But never before has so many tonnes of beef being traded on the global market. That's on a tonnage basis, but also the percent of product being produced in these countries and then exported is also at a record level as well. So more and more the global market is being crowded out by these different players. And that product is finding a home in Asia and it's becoming particularly competitive. I think it was in 2015, Ian Mars stood up at LIVEXchange and said, be careful because Brazil's coming and we have to watch out. And he's speaking on behalf of Minerva over there. And basically what he said's come true. If we look at the shift out of South America into Asia, look 10 years ago in those yellow bars on the left there, they had very little footprint in Asia. But fast forward to today, Asia and particularly China now accounts for about half their export market. So traditionally in a market where Australia dominated, we're now seeing a lot more South American product into that country, into the region. On top of South America in Asia, there's also seen a recovery of US product in the region too, particularly in Japan and Korea. Australia had about a 10-year period where we were fairly protected due to BSE and the following repercussions of that in both those countries. But now the US has recaptured a lot of that market, not purely at the expense of Australia. The overall pie has grown, but US presence in North Asia has grown considerably. So whether it's at the low-end commodity end of the market or high-end US beef, there is competition for Australia across the region. Just translating a lot of that information into pricing, I think this is quite an interesting chart and tells a lot. This is the Australian National Heavy Steer Indicator. in Australian cents a kilo live weight. And we saw a huge shift back in 2016 and 15 when the market, when supply contracted considerably and the market lifted, and it hasn't really gone back to where it was prior to then. And that's largely also thanks to the Australian dollar coming back. But if we also look at export prices, here we've got the Darwin feeder steer indicator, and it's roughly tracked the heavy slaughter steer indicator as well, and they're both a bit over $3 at the moment. If we compare ourselves to the Kiwis, they've also kept pace with us, but critically, if we compare ourselves to the South Americans, so here's Argentina and Brazil. Basically, since 2015 and 16, the two markets decoupled quite a bit. So if you look back in 2012 and 13, everyone was closely tracking each other, but the huge depreciation in South American currencies has meant they can deliver beef and cattle to the global market fairly cheaply. At the other end of the spectrum, we've got the US, and traditionally, this is a grain-fed US steer indicator, so it's going to trade at a premium to the national Australian indicator anyway, but that premium that the US has been trading at has contracted quite a bit in recent years, and now we're close to being on parity. So looking forward, where prices might go, on the positive side, there's this really strong Asian demand, and that's only going to be fueled further by the spread of African swine fever and global protein shortage that's going to come. If Australia does go into a rebuild phase and have an average or above average couple of seasons, that'll also support prices as restockers enter the market. However, there's still the risk that this drought continues and puts a cap on pricing. And also, there's the risk that things like the global trade war could weigh down on the economy and push it into recession, which is particularly risky for us, given that there's so much beef floating around the world at the moment. So far, that's being readily consumed, but if that demand was to slow down, it could be particularly competitive in the global market. So that's a synopsis of the cattle side. I just want to touch briefly on sheep before I wrap up. So just looking at some short-term trends over the last couple of years, we're all aware of the temporary trade closure during the Northern Hemisphere summer. So here we have monthly exports out of Western Australia. And typically over those Northern Hemisphere summer months, we'd probably export around 400,000 head of sheep. But this year and last year, those sheep didn't leave the country. However, if we then look at WA sheep and lamb slaughter, over that exact same period, we actually haven't seen a corresponding lift in the kill. So those sheep aren't necessarily going through kill floors in Western Australia. They're being either held in the state or being exported either side. Looking more at a long-term picture, I think this is an interesting chart. This is global sheep imports around the world. And this is FAO data, and they've called it Western Asia, but it's basically the Middle East when it comes to sheep imports. And we can see over the last decade and a half or so that sheep demand has remained fairly steady, or if not increased marginally, particularly in the Middle East. But this growth in import demand for sheep meat has come at a time when generally the sheep trade out of Australia has declined, largely a result of the flock changes in WA and then nationally. But really, in the mid-2000s, Australia was exporting around 4 million sheep per annum. Prior to the trade closure, it was about 2 million head per annum. But that didn't mean that the demand for sheep in the Middle East closed. It was largely filled in by other major exporting areas, particularly Africa, and mostly that's Somalia and Sudan, have filled that gap, or if not grown it further, as well as a range of other countries out of Europe and Central Asia have filled that gap. So even if Australian sheep decline further, I don't think that would necessarily mean that the demand for live animals in that region would necessarily stop. The other interesting trend we've seen over this period is the growth of the carcass trade out of Australia, and that's partly offset some of the decline in live exports, but it's definitely been on a market-by-market basis, with markets like Qatar more willing to take carcasses, while other markets haven't been. But also, those carcasses have been coming out of the eastern states, not necessarily Western Australia, so it's not necessarily a case where sheep have shifted channels and gone from purely a live export to a carcass trade. That's all from me. So basically, in short, I think on the cattle side, the outlook's pretty good for pricing at least. We are going to enter a situation where numbers will be historically tight. We still have a fair few cattle to send to our markets, but compared to where we've been over the last few years, we're not going to be able to flood the market like we have seen during previous droughts. Underlying, there's really strong demand growth in Asia, and particularly China and Southeast Asia, and ASF is just going to add fuel to that demand growth as well. But we do need to be mindful around the competitive pressure that we're faced with, and if that demand was to slow, there's a lot of other people out there that can produce beef probably cheaper than we can and send it to these markets. And on the sheep side, short term, we haven't really seen a huge shift in kill numbers out of WA in response to some of those closures. And in longer term, I think in the Middle East at least, there's still going to be demand for live animals in those markets. So that's all from me. I think are we ahead of time, or we got probably a couple of minutes for questions, I think. I'm also around all today and tonight if you have any questions you want to chase me up on. Otherwise, we can probably do a couple now. Thank you.
There is time for a couple of quick questions if anybody has any.
Thank you, Tim. I'm Anna from Stock Place Marketing. Just a question looking at the market in Indonesia in terms of Indian buffalo meat. What's the future going to look like for that? Do you believe that will impact the demand on Australian beef going into Indonesia?
Any additional product in the market will have a degree of impact. I think what's interesting though, that since Indian buffalo has been in that market, we've seen little displacement either from Australian beef or cattle. At the moment, over the last 3 years, cattle exports to Indo have increased while Indonesian buffalo has been in the market. Where we have seen a small impact is probably on manufacturing beef out of Australia, and that's where it probably has a bit more overlap with the Baxo bull market. So there's potential to impact us, but overall I think the market is so underserviced that consumption is so low that any additional product going into there can easily be consumed by the market. It is a competitor and it will have an impact on us, but I think there is so much potential for demand growth there that it's being readily consumed at the moment as opposed to displacing us. Yeah. Thanks.